Hey everyone, welcome back to Corporate Decoder, where we try to understand what the people in suits are trying to tell us, and sometimes it is not what it seems. Today we're diving into a report from Neuraxis Incorporated, and let's just say their latest numbers might leave you scratching your head. First off, this is an official report filed with the US Securities and Exchange Commission, or SEC. It is basically a company's way of keeping the public and investors in the loop about important happenings. Think of it as a window into their financial health and any big changes. Now, this report is dated the 23rd of October 2025, and it is about what Neuraxis Incorporated was up to around that time. Neuraxis Inc. is incorporated in Delaware, which is a common place for companies to set up shop legally. They have common stock, which is what most people think of when they talk about owning a piece of a company, and it is traded on the nice American exchange under the ticker symbol Neuraxis. Interesting note here. Neuraxis is considered an emerging growth company. This basically means they are a newer, smaller public company that gets a little more leeway with certain reporting rules, allowing them to delay adopting new accounting standards. It's kind of like getting an extension on homework. The meat of this report, the really juicy stuff, is in item 2.02, which talks about their results of operations and financial condition. This is where they reveal how they're doing money-wise. So, as of the 30th of September 2025, Neuraxis is expected to have about $4.4 million in cash. That sounds like a decent amount, but we need to see how that compares to what they owe and what they're making. Here is where things get a bit concerning. For the 3 months ending the 30th of September 2025, they anticipated net sales, which is the money they brought in from selling their stuff, to be around $0.8 million. That's less than $1 million in sales for a whole quarter. And their gross profits, which is the money left after they pay for the direct costs of making their products, were expected to be about $0.7 million. This means they're making some money on their sales, but they're not selling a whole lot. But here is the kicker, they expected an operating loss of about $2.1 million. This means that after paying for all their expenses, including things like salaries, rent, and marketing, they lost $2.1 million during that quarter. So they are spending way more than they are earning from their sales. Looking at a longer stretch, for the first 9 months of 2025, their net sales were expected to be about $2.6 million. That's an increase compared to the same period in 2024, where they had about $1.9 million in net sales. So yes, sales are growing, which is good, but the growth is not large enough to cover their expenses. Now, they're also very clear that these are preliminary numbers. They're still finalizing their financial statements, and they admit that these estimates could change. They say they'll have to make significant judgments, meaning pretty important decisions about how to account for things, and these could lead to the final numbers being different. And importantly, their own accountants, their independent registered public accounting firm, haven't actually checked these preliminary numbers yet. They haven't audited, reviewed, or done any checks. So these are just the company's best guesses at this point, and they encourage people not to put too much faith in them. They could still find things that require adjustments. And those changes could be material, which means big. They also include a standard legal disclaimer stating that this information isn't officially filed in a way that makes them fully liable under certain parts of the law. It is basically a way to say, here is some early info, but don't sue us if it changes. Finally, we have the signatures confirming that Brian Carrico, the President and Chief Executive Officer, has signed off on this report. So, what's the story here? Neuraxis Inc. is growing its sales, which is a positive sign, but the growth is not keeping pace with their expenses. They are burning through cash, and the preliminary results show a significant operating loss. While they are trying to be transparent by providing these early numbers, it's crucial to remember they are just estimates. The company's profitability is currently a major concern, and investors should watch closely how they plan to bridge this gap between sales and expenses. The fact that they are an emerging growth company might offer them some flexibility, but ultimately they need to show a clear path to profitability if they want to sustain investor confidence. We'll have to wait for the final audited financials to get the full picture, but based on these preliminary numbers, it looks like Neuraxis has some serious work to do to turn things around. Alright, that is our breakdown of Neuraxis' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.